Another simple principles video. Okay, so today we're going to be talking about is something super cool because this is going to allow you to get more sniper entries, ninja entries, really tight stop losses, amazing risk to rewards. And obviously today we're talking about price imbalance, okay? So this is a really cool concept, kind of a more advanced concept, I would say, but very effective. I use this all the time, more as an entry, waiting little strategy, just so I can get better entries. Like I said, ninja entries. Okay, really small stop losses, but it can be also a very nice confluence. With regards to when you should get in a trade. Okay, a lot of people somewhat jump the gun. So if you know about this, then it can really level up your trading. All right. So, anyways, what is price imbalance? What the heck does that mean? And how can I use it? Very simply put, how price imbalance works is the following. We look for three candles, okay? We look for three candles. So let's say right here. 1, 2, 3. Okay? And just a heads up, I'm going to say it. I know you probably already know, but you want to go with the trend with your trading. Okay, you want to go with the trend. Trend is your friend until the end. Okay, very rarely you want to do counter trend trading because more times than not you're going to get hit. However, I just have to say that before we continue. Anyways, you're looking for three candles. How the rule works is candle number 1, which is right here. The wick has to touch the wick of candle number 3. Okay? Here's the deal. That didn't happen. So now we have a price imbalance of this much. Now, kind of a pro tip or whatever you want to call it is you want to look for these impulse moves, these massive candle bodies, these massive moves. And the reason is simple because when you see massive moves, there's a greater probability that you're going to have price imbalance compared to a little tiny candle like this. Okay, it's mainly when you have these new breakout moves or larger moves. Okay. But what price imbalance is something like this when the first candle and the third candle doesn't touch. Wicks, okay? Wicks. So this right here would be a beautiful price imbalance. Obviously, we're sort of at the end of the trend over here. But as you can see, if this wasn't the case and if this was going to continue going up, and I'm going to show you a lot more examples, so you can actually go through and study everything yourself, right? But what you'll wait for is something like this. You'll get a wick down entry like that and then continue on. Okay? So what I usually do, I'm going to explain this before we look at more examples, is I usually wait until there's about 50%. A candle comes down 50%. Usually it's a wick. Okay? 50% of that price imbalance like this. And then I get sort of a limit entry and then we go on, right? So as you can see, there's 50%. Literally the wick came in. I got filled, my order got filled, and then my stop loss would just be below sort of that breakout, right? Sort of that move. And then my stop loss is, accordingly. But what we're going to do right now is we're going to actually go through and look at some price imbalance moves. So how you could have used this to your advantage, okay? So let's just see right here if we can see any price imbalances. Let me go back some. Okay, let me go back some. And I'm on GU right now. Okay, I'm on GU and I'm looking at the 15-minute. Okay, so let's just go back a bit. Let's go here. I feel like there'll be some in here. So again, what is the criteria? The criteria is to have a large body candle, right? Large body candle. And I see two right here. This is number 1. Let's start here, okay? So this is what I'm looking for. This is candle number 1, this is candle number 2, this is candle number 3, the white one. If I go like this, look at that price imbalance, right? That's a huge price imbalance. So what could I have done? Taking my position, instead of getting in over here like that, right? Instead of getting in like that, right? And let's just say, our stop loss was here, and I know we got stopped out over here, but let's just pretend. Okay, let's just pretend. I want to show you the potential of this. If we go all the way up to here, so we're retesting these previous highs. This right here, if I got in right when that candle closed, this is a 1 to 1.63 risk to reward. However, now because we know about price imbalance, right, if we waited for that imbalance right here to be filled, in that wick to come down, what I'm doing is I'm making my second trade with that wick in, right? 50% price imbalance fill. I'm waiting, or sorry, I'm letting the stop loss be the same and the take profit be the same, even though we got stopped out. I'm just showing you the risk to reward. If we got in again when that candle body closed, the big one, 1 to 1.63 risk to reward. However, if we waited for that wick, look at what we got. We got a 1 to 3.16, so we doubled it. Okay, so now let's look at an actual position we could have taken, right? An actual position, and that was right here. Oh, sorry about that. Right here, right? This is candle 1, candle 2, candle 3, right? There's candle 1, wick. Let me move that so it's accurate. Boom. Candle 3, wick. We have a little bit of a price imbalance. So put our order 50% like that. Again, we can move it, if we want to be safe, we can move it below that previous sort of low. And then let's retarget this high over here, right? We can retarget that high as our first take profit. Now, again, this was not going to be that big of a change. But if we got in, right, where that candle closed, so same stop loss, same take profit. This one's not going to be the biggest. 1.6 compared to a 2 risk to reward. However, if we look at larger ones, right, larger price imbalances, you'll see that a lot of these trades will go in your favor. You'll have massive, all right, risk to reward, as opposed to if you got in sort of where everybody else got in, right? Now let's look at the 1 hour, because there's a lot more moves on a bigger time frame like this. Prime example like this, right? So this is candle body number 1. This is number 2, and this is number 3 at the top. This is a beautiful example. Okay, we're on the larger time frames now. This, perfect. Just to show my example again, if I have my stop loss down below here, my first take profit, let's say was, okay, let's go over there. Beautiful. This right here is a beautiful trade. It's a 1 to 2.3 risk to reward, right? However, if we do the same stop loss, okay, same take profit, and we wait for a 50% candle, right? 50% pullback for this price imbalance to be filled over here, right? You see my entry over here. We went from a 1 to 2.3 to a 1 to 4.2. We almost doubled the risk to reward, right? We minimized our stop loss almost by 15 pips. So we gained 15 pips of profit. Oh, and yep, so there we go. So this is a beautiful trade, and you can see how we literally doubled our risk to reward using something like price imbalance, okay? So that was a beautiful trade. And you can also, if I go like this, you can also stack up different confluences, right? You can go like this, boom. Oh, look, now we have a fib entry as well. If you haven't looked at our fib video, make sure you go ahead and check that out. It's obviously free. We explain why you have a lot of wicks into 618, 786 golden zone, why we only use these levels instead of everything else. But I'm just showing you how you can stack confluences on here, right? So let's look at another example of price imbalance. Another example of price imbalance, right? So let's go over here. Let's see. And what are we looking for again? We're looking for big wicks into the bodies, right? Wick filling that price imbalance. Now here's one right here. This is a little bit of a counter trend. So if this is candle 1, 2, 3, in fact, you know what I'm going to do? I'm going to go like this. So this is the price imbalance right here, right? Beautiful, right there. If we took the short position, right, and we're trying to go down here, beautiful. Our stop loss would be all the way up here. This isn't a trade you would take. A 1 to 0.7, right? 1 to 0.67 risk to reward. That doesn't make sense. However, if we do the same stop loss, same take profit, and we decrease this, so 50% of that price imbalance is filled over here, we now went from a 1 to 0.67 risk to reward to a 1.1, sorry, a 1 to 1.63 risk to reward. This whole point thing is messing me up. But as you can see, we almost tripled this position right here, right? Almost tripled the position just because we took advantage of that price imbalance, right? We took advantage. This candle came all the way back up, and then we continued on with the movement. So there's a lot of these examples that will occur, right? A lot of these examples that will occur, and it's easier to look on the larger time frames because again, we're looking for those big candle movements, right? Those big impulse moves, breaks of structure, all that kind of stuff, right? It just makes there's a lot more clarity that goes on with movements like that opposed to the other. Now here's another example, right? Boom. If we got in all the way over here when that candle closed, right? Stop loss, we'll put it over here. We'll be conservative. Stop loss over here, right? Now in this example, I'm going to target these bottoms, right? Okay, so beautiful. So that's our entry right here. Was this big impulse candle, break of the structure, break of this low, right? So we got in right when that happened. Right here we have a 1 to 1.75 risk to reward trade. Beautiful. However, try to see if we can get it better. Same stop loss, same take profit. Okay? I'm going to wait 50% of that imbalance. Boom. Beautiful. See how the wick, it's crazy because this will happen. Here's the price imbalance. It's not anything big. You see the wick of the candle body here, wick of the candle body here. It's just a little one. It's not big. In fact, it's about 10 pips. Okay? But that 10 pips can make a difference, right? Anyways, you see how that white candle right above where my cursor is, right here. See how that candle wick literally fills it and then continues on? And this is the trick. I'm a bit more conservative using the strategy. Okay, I don't go. A lot of people will wait for a full pullback, filling in the entire, right? The entire imbalance. I just go for 50% so I can get more trades. Because other people, like this one, you could have pulled it back a bit more. A lot of other examples, you'll see that you can actually go all the way for a full price imbalance. Like look over here, right? This was the price imbalance. This came all the way back 100%. So if you're willing to do that, if you're willing to wait, go ahead and do it. But I'm just doing 50%. I usually set a limit order, let it ride. But what I really want to show you is if we got in all the way down here where the candle closed, which is where a lot of people would have, right? Again, your risk to reward is 1 to 1.75. If we waited for that price imbalance over here, right? 50%. Your reward is a 1 to 3.93, a 1 to 4. You literally doubled your position. So you would have made 1.75%, right? If you let this trade play out, and it obviously did over here. If I even extend this, boom, it obviously did. You would have made 1.75%. I would have made 4%. You see the difference? That's how you can really grow these accounts using little tiny, strategies like this, little tiny strategies. It's not difficult. It's very, very simple, right? And you'll see, again, so many instances of these happening, right? Over and over and over again. So let's look at some more, right? This right here was another beautiful one. Boom, right? And this is something I'll do too, okay? I'll mark up the price imbalance like that, and I'll literally just keep scrolling this over until boom, okay, it's filled, right? But again, now we're trading with the trend, right? If we take an entry here and our profit target is all the way up here, okay, this is our TP. We're testing those previous highs, right? So we do get hit. Stop loss, boom, okay? Perfect trade, look at that. 1 to 2.5. I copy and paste. Same stop loss, same take profit. I wait for that wick fill of the price imbalance here, right? What is that? We went from a 1 to 2.5 to a 1 to 3.5. You got a whole nother percent, right? And let's say you're trading with, one of the FTMO $100,000 accounts. That 1% is another $1,000 in your pocket, right? So these little detail changes do make a difference. Even on a $10,000 account, that's an extra $100 in your pocket, right? $1,000, extra $10 in your pocket. But as you can see, very, very cool. And in fact, let me go back here because this is important too. Notice how price actually dips down, never breaks, never comes down and breaks and stops us out, but then continues on. And notice how this comes back as a pullback, right? And then continues on before making new highs. Again, we go like this. Introduce our fibs. That's a perfect fib play. You could have taken another position here, another position. Or you could just stack confluences like we just did. But as you'll see, there's a lot of opportunity with this. And something I want to address as well is a lot of people will get these huge wicks, right? This is a liquidity grab, right? So these aren't stop hunts, but they're filling in to a certain extent price imbalance, right? They're filling in price imbalance. They're not there to necessarily stop you out. That's a very beginner concept, very beginner level concept. There's reasons why that's happening, right? Long story short, which I'll make a whole nother video on, is liquidity dips down, allows those orders to be filled. Now you're allowing those people who are now trading those positions to be in the market. Therefore, the market has more momentum to move, right? Liquidity equals momentum. Momentum equals movement. It's in the name, momentum, movement, right? But you can see how many times that these price imbalances will be filled, how you can get amazing positions with them, and how you can really take advantage. Here's a beautiful one, right? There's so many of them all around. But again, first order of business, please trade with the trend, okay? We don't want to go against the trend with something like this or in general. With that being said, right? Can't really see, that's a dark arrow, but trend is going down. This is a bearish trend right here, okay? So if we saw two examples right here, number one, right? Look at that price imbalance. If I go all the way over here, look at this. Price doesn't continue on until it fills, right? You could have taken the position here. Let's go again for those lows. Stop loss just above. Okay. 1 to 1.5 risk to reward. Sorry, 1 to 1.15 risk to reward. So 1 to 1.1. That's okay. 1 to 1 risk to reward. Let's copy this. Boom. I'm trying to make this as accurate, right? Okay. And then we'll go 50%, right? 50%. Look at that. 50% of that price imbalance right here. We now went from a 1 to 1, right, to a 1 to 2.1. We literally doubled that position. Beautiful, right? Another example, right after that, this is a huge price imbalance right here. Filled, continued on, right? So our target, again, can be these lows. So this is our stop loss all the way up here, right? This trade isn't going to make sense, right? We got a 1 to 0.8, less than a 1 to 1. We wouldn't take that trade. However, look at that. We went from a 1 to 0.8 to a 1 to 1.6. That's with this massive stop loss. We can even decrease the stop loss just above there, right? So we go from a 1 to 1.36 now, right? Decreasing the stop loss to a 1 to 4. We literally almost tripled this position, right? In fact, I think we did. We literally did. Tripled this position. So you can see how effective a tool like this is. Price imbalance, right? You see these price imbalances, and even though, let me go like this, okay? Even though we may have our fib on, right? We may have our fib, we could be like, holy shit, look at this pullback. Perfect line up into that little price imbalance area. Oh, look, that's a second confirmation or confluence. And then the third one, oh, look, that's a downtrend. That's a bearish market. Okay, we're going with the trend. That could be a third one, right? Then you could look for, I don't know, big wicks, right? You could look for something like the 3-pin, right? The 3-pin bar reversal, which is another video we have. But you just stack them. But this is another very cool concept I use a lot to get those sniper entries. Right. So anyways, I'm going to leave the video here. I'm talking for a lot. But this is a very cool concept, right? This is how you can elevate your trading game. I just showed you the last example. What was it? We went from a 1 to 1.3 to a 1 to 4. We literally tripled the position waiting for that price imbalance to fill, right? Waiting for that price imbalance to fill. And now we can also understand, right, to a certain extent, why price is coming all the way back like it is. Oh, why is price coming all the way back? Why is the pullback coming all the way back to where it is? Oh, wait, there's a price imbalance. Maybe that has something to do with it. Maybe it's waiting to be filled. Oh, why is there a lot of movement around this area? Oh, there's a price imbalance. Maybe there's a lot of orders stuck there, right? So you can actually go through and really start to understand at an advanced level why things are happening in the market. You can now up your game, get better positions, better risk to reward ratios, tighter stop losses, larger profits. You can grow accounts much more efficiently, right? Very cool stuff. Anyways, this is where I'm going to leave it. I've spoken way too much in this video. I hope you learned something. I really do, because this is something I use myself and it's so effective. If you have any questions, make sure to comment down below. I answer literally every single one. I stand by that. Go through any one of my videos and you'll see I literally comment after every single comment I get. So any questions, do that. Other than that, if this video helped you, started there, give it a thumbs up. Really appreciate it. Same with a sub. Join the Discord. It's free. Tons of free stuff. And other than that, I'll see you in the next one.